Hello, good morning, everyone. It's about 8:35 in the morning here on the 8th of November 2022. We've got our midterm elections today. Lots of stuff is going to be happening today. But what I'd like to do is I'd actually like to focus a little bit on Tesla and Apple. I did an update on the S&P 500 yesterday. You can go back and take a look at that. Really, nothing has changed there. So what I'm going to be doing, and actually what I kind of want to start doing moving forward, is focusing a little bit on some individual stocks, because I think we're getting ready to see some good long-term buying opportunities and basically creating kind of a major bottom here in the near future. And so I want to talk a little bit about some players that really haven't dropped as much as some other assets out there, like Meta, for instance, has dropped significantly since the top, but some others have not. And so I want to talk about those. Before I get into these two guys, this is not financial advice. It's not your financial advisor. You're responsible for your own trades, managing your risk, doing your own research, and this is just my opinion on the market. So take it with a grain of salt. And so let's go ahead and move on into the chart. First thing I'm going to take a look at is Tesla. So, this is something that everybody's really taking a look at, and they have been for a while, and we talked about this on our server quite a while back. And that's this enormous head and shoulders that we've got on here. I'm going to take out this 255.04. We broke through that, and of course we've been falling ever since. We talked about that 255 level for a while when we were talking about butting our head up here at the top here at about 313. We did that 3 different times, and I'm on a daily time frame here, so I'm going to zoom in just a little bit. What I want to talk about is the fact that there was a point in time in the past, and I want to say this was 2021. Everybody was talking about how everything was overvalued. Yet you're totally shocked that we have been seeing a drawdown on the market like we've been seeing this year. This is not unexpected. The market moves in cycles. If you go back and take a look at my 55-year cycle video, you'll see in there pretty clearly that we've been talking about this pullback for quite some time, and so we've been kind of waiting on this. This is a great opportunity to make money, and we've been destroying the market with this downside that we've seen. Admittedly, I actually am a better trader in a bear market than I am in a bull market, but it is what it is. So now that we're here, let's just kind of take a look at things and see where we are. All right, so first off, our indicator, this is on a daily time frame, was warning that, like, hey, we're nearing the top. We had some thrust up here to basically kind of create a little bit of a blow-off top. It wasn't exactly a blow-off, because if it was, what we would have seen this come all the way back down to here before kind of rebounding and going lower. That's not exactly what happened. That would be like a bubble pop. But at any rate, we had some upthrust going into a buying climax, which of course was met by sellers, right? So we kind of ran into supply, right? So now we're kind of down here at this demand zone. So it is expected that we would be seeing some significant bounces off of these areas. Like here was a decent demand zone, and we had a 63% move off of that. And then here's another demand zone that we saw off of here, and of course that also yielded about a 50% gain. So we've got great opportunities, but of course, if you don't know what you're doing, well, then you can get yourself caught and actually find yourself, down after a 63% gain, find yourself down 10%. And then here, again, we were talking about this, having, a 50% gain, well, and then you find yourself down currently, down another 6%. Right now we're in a bear market. So the trades that you should be taking a look at shouldn't be long term. Yeah, you're going to have a little bit of a tax disadvantage for realizing these gains, but fact of the matter is, even if you only caught 80% of this move, let's say that you bought right here and you sold right there, that's a 34% move. Yeah, you're going to get a higher tax bill on those gains, but you're still taxing gains, right? That's what a lot of people fail to, understand. We're in a bear market, which means that rallies are being sold into, and I don't have any reason to believe that that's going to change anytime soon. And I did say rallies, which means that we're going to have significant markups. Some of the best opportunities to make money are in bear markets. We have a significant drawdown. If you can get the pivot right, well, then you have a great opportunity for for making profits. And looking at the daily indicator here, we had a good buy signal back here, and that was right here at this area. The next sell signal, as we can see, was right here, and that was up here. So you were able to capture a 41% gain off of an asset that had already dropped, a decent amount from the top. It had already dropped here 47%. And we're down even lower right now. I don't think it's going to stop really anytime soon as far as the bear market, right? I do think that we are getting close to realizing a significant bottom in the market. From a fundamental perspective, Tesla is, Tesla is a company that is going to be met with increased competition. You've got the heavy hitters like GM, Ford, all of these major auto companies that have been around for the better part of a century here, right? Some of these companies have been around for a very long time, so they're not new to the auto industry. They just need to adapt. And yes, Tesla was the pioneer, in my opinion, at least in the current, in the current age that we're in on EV technology, and also with the not just the battery tech, but the actual tech behind the cars themselves. Tesla is a pioneer there. Nobody can deny that. But these other companies, they're going to be quick to respond to that. And because of that, I think that Tesla, as an overvalued company, is going to see a little bit of a drawdown. And mix that with Elon Musk doing all of the things that he is doing. He's got companies that he's taken private, but what is the public company that Elon Musk has? Well, that's Tesla. You don't have Boring Company, you don't have SpaceX, you don't have Twitter that you can trade anymore. So it's all going to be based off of Tesla from an investment standpoint, because you're really investing in the guy, in addition to the company, right? But he is going to be front and center of that, at least until until things change. So what am I trying to get at here? All right, let's just get right down to it. We've got a big head and shoulders that we've been, kind of keeping an eye on for a while, and now more and more people are starting to talk about this. You've got a shoulder, a head, and a shoulder here, and then I've got the neckline, which I've outlined right here. Okay, so just to talk about those 4 points rather, that I want to mention here. So where is the downside target for this? All right, first things first, I want to throw some geometry on here, because I love geometry, and geometry, when it comes to charts, seems to work out pretty well. So are we getting close to a bottom? It looks to me like we're getting close. I don't think we're quite there yet, but what I'm starting to see on the daily time frame, you've got the yellow, the red, and the white wave that are all down here in oversold. You've got the green wave, which is the short term, right? So that's our daily wave. It is getting down there. So I would expect what we're probably going to see is, continuation down here. Maybe it extends down below, right? Maybe it gets down here to about 185. And then I think we're going to see a significant rally off of that. And then where that lands, we don't know where that's going to go, right? Heck, it may come all the way up here. That would be, again, a monster rally going into next year. But from there, I do believe that we're probably going to see a continuation to the downside. However, if this breaks, where is the target? Let's talk about if 180, we'll call it 185. If 185 breaks, and I'm bearish below 200 on Tesla, just for the record. If 185 breaks, well, chances are pretty good we're going to come down to another significant demand zone. All right, so using our trend-based fib extension, we're going to take the top here. We're going to go to our neckline, and then we're going to go to where it broke, which is going to be right here. Our demand line, that's going to be down here at about $102. Right now, Tesla's at $197. Is it possible that Tesla can drop another 50% in value from kind of where it's at right now? Well, that does coincide, just for the record, with this area of demand down here. Yeah, technically there's a gap right down here. We're going to fill that gap. I don't know. That still remains to be seen. To go down below $100, that may not happen this year. It may not even happen next year. That may be something that doesn't happen until 2024, because again, I'm looking at a daily time frame, and it took a long time for us to get from here up here. So for us to completely revert that, it could take about the same amount of time. And how long did it take for that to occur? Let me go ahead and get my trend-based fib time. I'm actually going to get my fib time zone, and I'm going to track it from this area right here, which is where we sparked that demand, right? We had a big demand area up here. Let's go all the way up here to the top. And where is our equality for that? That's going to be right here. February of 2023 would be the equality from an upside to downside move. That would take us down here. So potentially it could happen next year. That would be pretty serious if that were to happen. I give that a pretty low probability of happening, because I do think that here in the next few weeks, maybe 4 to 6 weeks, we're going to see a significant bottom forming. And when that happens, just be careful being a bear when that does happen, because there is a high probability we're going to see a significant bounce. So anyway, downside for the head and shoulders, if you're in the head and shoulders gang, downside for that's going to be at about $137 and then about $103. So again, give it time, because it's going to take time to occur. But as we have seen in the past, with Meta, for example, this has, fallen off the cliff, right? Fallen off the cliff. We're trying to find some support here at the 1236, but it looks like it wants to go down here to 75. Fact of the matter is, I did buy a little bit of Meta, and just kind of disclose this. I did buy a little bit of Meta below $100, because I think that even though, people are really hating on Facebook, I think that their platform that they're building for their ocular devices is actually going to be pretty good. And we have a pretty strong buy signal on Meta for the on the daily time frame as well. So Meta may have bottomed. Just kind of throwing that out there, keeping that in mind, that it is very possible. All right, so now let's take a look at Apple. The one that everybody wants to really pay attention to. We've been talking about this for a while. Apple has been probably one of the few that have really been holding up the S&P 500 throughout the entire bear market, right? So Apple really hasn't had that significant drop that a lot of other assets have, like Meta, for instance. But Apple is being plagued with production delays and different things that are happening. But as we can see here with the indicator, at least, it doesn't look like we're done going down. And I would expect that it's very possible for Apple to be one of the assets that are out there that can really cause a significant drop in the S&P 500. We keep talking about the S&P going down to, 3,600, 3,650. From what I'm looking at right here, what we're in the middle of creating, at least in my opinion, is a complex correction here, where we've got from the top, right, you've got easily a 1, 2, 3, 4, 5 into an A, and then a B, and then we go down for the C. Now, where is that C target actually going to be? Again, this shouldn't be any news to you. I'm going to use my trend-based fib extension tool, dominant pivot high, dominant pivot low, and let's get the retrace. The 100% is sitting here at about $120. The 1236 is sitting down here at 112. So somewhere in this area, I would expect that to be an area where we're going to have significant demand on Apple. So let's just go ahead and take this and look left. I always like to look left and see where this, what this encapsulates. All right, so first off, let me just decrease the transparency on this so we can see it just a little bit better. Or I guess increase transparency, decrease opacity. So, excuse me, right here at the 123.6, we have an area of significant demand. Okay? Same thing at the 100, we have this also at an area of significant demand. So I would expect, if anything, if we saw a break of this 618, which again is a target, but I'm expecting it to go lower. If we break through 133, then 120 is almost guaranteed to come next. Nothing is guaranteed in this market, but if we break down through 133, chances are very, very good we are going to go to 120. Another thing that I want to take a look at here is a different trend-based fib extension pull. That's going to be from this dominant pivot high to this dominant pivot low here. And let's get the retrace and see what we've got. So right here, we got to move to the 1618. All right, so this looks like obviously a completed move. Obviously, we had a huge move off of that. All right, and then of course, there's really nothing below this until we get to 107. So I'm going to say that this move was completed. So with this move being complete, one more pull from this very, very high here to this very, very low here, and then let's get this pullback. And what do we have here? Okay, a little more confluence at the 123.6, right here inside of our green zone. And then of course, we have an area here, 125, that we should pay attention to. Are we going to see Apple go all the way down here to the $100 area? I would say chances are small, but again, that could be something that happens not this year, maybe even not next year. It could be, again, a 2024 thing that we've been talking about for a while. Because, again, I believe this bear market is going to last a while, right? We're going to have, life-changing rallies in this. I mean, Apple is a really great example right here. We had, a 35% rally. Not as good as Tesla, right? Remember, Tesla had like a 60% rally. But if Apple does go all the way down to, $115, that's a great opportunity to be buying, considering it was at about $180 in December and January. If it goes down to $100, well, we are basically down here in this zone. This almost looks like a battle zone down here with all of these fibs. This 175 here happens to be at basically the same area where we had this huge, huge gap. So right there, we should definitely be paying attention to. And I know it's easy for me to say this right now, but in this area, we have to be paying attention. And I would be a serious buyer in this area, because this looks to me like a great area for a long-term buy, especially after we will have seen, if we do get down there, a significant drop going into the future. So these are the things that I always pay attention to. I think this correction is going to be completed somewhere, at the 112 to 120 area. And again, that's going to be the first part of the correction. Then we're going to have a significant rally to the upside. From there, we're going to have to wait. We're probably going to have about 4 to 6 months of a solid rally before we're going to have a pivot back to the downside. So just keep an eye on your put to call ratios. When you start seeing people getting really, really super bullish, that's when you should start looking at a trend shift, a trend change. Because as of right now, it does look like that Apple is probably going to drop over the next couple of weeks. And again, it's probably going to be one of the few that's going to help pull down the S&P, while everything else is kind of move sideways. There's going to be some outliers out there, but that's what I'm looking at here on Apple as well. So I did want to keep this kind of short. I kept it under 20 minutes talking about Tesla and Apple. Threw in a little bit of meta in there, but ultimately this is kind of my outlook on the market, at least in the short term. I think in the short term we are going to see assets move down, and then we're going to see a significant bounce to the upside, probably going into the new year or after the new year. All right, guys, I'm going to go ahead and end it here. That's been fun. If this video did help you in any way, shape, or form, you know the deal. Like, subscribe, share. If you need access to our trading room, you can find that on BitDoctor.org. If you need access to our education on Elliott Wave theory, trade ideas, equity, and options, BitDoctor.org. We also do some spreads and some futures trading as well in there. You can find that again on BitDoctor.org. And last but not least, wherever you are in the world, I hope you're having a good day, good night, and a good evening. Take care, everyone.